Hi, good afternoon, everyone. Thanks for turning up to hear about Tudor Gold. I'm Joe Ofsenik. I'm President and CEO of Tudor Gold. So I will be making forward-looking statements throughout this presentation. So to kick things off, at Tudor Gold, we have one of the largest gold discoveries in recent times at our Treaty Creek project up in northwest British Columbia. We're located in the Golden Triangle. If you're not familiar with that, we're just to the east of the Alaska Panhandle. Good infrastructure. We have a paved highway running up beside the 40 kilometers from the property, and we also have power there. You can see it a bit better on this slide. You can see where Treaty Creek's located. That solid line running up to the north takes you up to Alaska. That's Highway 37. The dotted line's the Northwest Transmission Line. We're about 40 kilometers from that infrastructure. So as far as the Golden Triangle goes, we're really well placed on the infrastructure side. If we're looking at the region in a whole, there's, if you're familiar with Seabridge Gold, their project is to our southwest. Up to our northeast, you can see the location of where they're planning to build their mill. So they need to come right through our property. We consider ourselves the gateway to this region. And of course, we believe our deposit is the best in the region. Looking at our updated mineral resource, this is a highlight that we just announced last Thursday. We now have 24.9 million ounces of gold in the indicated category and 4 million ounces of gold in the inferred category. That's a 15% increase from our 2024 mineral resource estimate. But more importantly, we've now refined the higher grade and defined the higher grade elements within that. So if we look, I'll just go back for a sec. This resource is at a $50 US per ton cutoff, an NSR value cutoff. If we look at the higher grade, we have two cutoffs. We have an NSR $125 value and NSR $175 value. So we're looking to focus in on a bit more on that higher grade mineralization. So at the $125, we're about 8.6 million ounces of gold. And you know you're not supposed to combine indicated and inferred, but if you did, your average grade would be somewhere at 2.4, 2.5 grams of gold per ton with silver and copper credits. On the 175, we're at 5.6 million ounces of gold with around 2.8, 2.9 grams per ton gold, plus copper and silver credits. So as we get into this presentation, I'll tell you a bit more about our plans. Here you can see some diagrams we put together. If you look at the left-hand side of the slide, that's our total bulk tonnage resource, the full 24.9 and 4 million ounces inferred. If you look at the middle slice, that's our $125 ton. And you can see the mineralization, the shapes have skinnied up a bit, but they're still holding together and still in good shape. Now, if we look at to the far right, we've got $175 per ton mineralization. And again, We've lost some mineralization, but some tons, but we still have some nice solid shapes. So what we're planning to do, and what we're doing right now, is looking at the higher grade cutoff where we can put a mine plan around these shapes. Can we go in and mine them? Now, you'll see little dots of mineralization off to the side and here and there. Well, you're not going to mine those. So, but the big solid shapes, yeah, you can put a mine plan around those. So our plan is to come in, take a look at this. Can we put a mine plan around it where we're mining, say, 10,000 tons a day, producing roughly 300,000 plus ounces of gold a year with copper and silver credits? And can we do that and make money? So right now, we're working on that, and I'll talk a little bit more. I only have 10 minutes, so I have to hurry here. One of the things we're planning to do to better define that resource is drive a decline underground, set up some drill stations, allow us to do some infill drilling. We're down about 600 to 900 meters with some of this higher grade mineralization. You can see those brown slices diagonal through the deposit. There's some nice grade in those. We think those will actually increase our grade as we continue drilling. But, 600 to 900 meters down below surface, it's better to drive a ramp down, set up some drill stations, and then bang off the hole. So that's what we're working on now. We're in the midst of permitting that. We filed a permit. The government said, well, we want to see more information. So we're working on that. So we should get it refiled and this month, February, so just coming up, and then kick things off. All goes well, we can start driving that ramp before the end of this summer. Worst case scenario, we get prepped this summer and we start driving in the spring. Either way, we'll get down underground and drill off to better define the resource. Now, metallurgy, we've done a fair bit of metallurgy. We're doing more. We have metallurgy underway right now with all the various parts of the deposits, and we should have those results, I'd like to say this quarter. We put those together with our mine plan. They should come together about the same time, say by the end of this quarter, and then if we're successful with that, we'll move forward with a preliminary economic assessment where we can start valuing, okay, what's the value of this deposit? Because that really tells you where you're going. Now, opportunities for development. So I've already talked about the 2 to 3 gram, and that's what we're going to focus on now. That's what our preliminary economic assessment is going to focus on, and we'll see what comes out. And if successful, you're going to see something this summer. There's also the potential for some higher grade, more Brucejack-like, that 8 to 10 gram average grade. But to do that, we need to get underground and do some more infill drilling, so we're probably a couple years away from really defining that scenario. And then there's the bulk tonnage scenario. Now, I don't see us moving together forward as a bulk tonnage scenario. You know, our focus, higher grade, underground, something with a CapEx billion to $1.5 billion, that's something within our capacity and we can move forward. For a big 150,000 ton a day operation, that's if Seabridge gets going. Maybe we look at somehow putting the projects together because it just makes sense from an overall perspective in that area. So 3 scenarios to get going, so lots of opportunity and value to be created at Tudor Gold. Now, not only do we have our main deposit, which is the Goldstorm deposit you see up at the top, we've drilled about 190,000 meters in there to date. It's actually about 191,000 meters. But there's other zones on the property where we've had discovery holes, but we haven't had the ability to follow up. So this summer, we're going to come back and we're going to be drilling 10 to 15,000 meters and seeing if we can come up with an initial resource, a maiden resource for one of these other deposits. Personally, I think Perfect Storm really has the potential to be better than Goldstorm where we are now. One of the last holes we drilled in there, over 100 meters at 1.23 grams per ton, and that's on the bulk tonnage basis with some higher grade within there. So a lot of potential for another deposit on this, all along this sulfurette fault that you can see here. It's running through the property. Now, our strategy, I pretty much talked about it. We're focused on the grade and advancing that grade to production. We're also going to be looking at, okay, we have 80% of this project. We have a partner that owns 20%. We're talking with them. I think over the course of this year and hopefully in the first half of this year, we can come to terms where we consolidate that, because I think this really is a position where the sum of the parts is worth more than the individual parts. So we're going to keep pressing ahead on that as well. So if we're looking at our plans for the year, first and foremost, kick off with a mineral resource estimate. That really is the driver for all the other things we want to get done. So that's done. We've had it announced. Metallurgy is underway. Will be completed this quarter. We'll work on consolidating, getting to 100%. I'd like to say first half of the year, we'll see how successful we are, but definitely big push to get it done this year. We're going to go in and have a 2026 exploration drill program, target to drill off another 5 million ounces as a maiden resource on one of these other deposits. We'd like to see you get our permit for the underground exploration ramp. And finally, we'll come up with a resource estimate for that new deposit. So those are the big plans for 2026. Everybody, well, we're in British Columbia. Everybody knows the government's talking about pushing mining, so I won't have to talk about that. We've got an experienced management team. 5 of us worked together for years. We discovered and built the Brucejack mine with the help of a lot of other people up in the Golden Triangle, about 15 kilometers south of where we're working now. So we know the area, we know what it's like to work there, and we know the different stakeholders in the area. So we're well positioned to advance Treaty Creek to production. And finally, this is our structure. We're currently Market cap's a little out of date. We're about 620 or 30 million today. Issued and outstanding 406 million. And our major shareholder is Eric Sprott, who most people know of. So that's it. I've got 10 seconds left, and thank you for showing up. Appreciate it.